Good morning, ladies and gentlemen. This is Butch Shorak, Options University. It's Friday, November 2nd, 2012. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We are not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. And looking at this week, in this very trade shortened week, as we had this very unique situation where we had 2 days of non-trading because of a hurricane hitting New York City. With that thought in mind, we basically only had Wednesday and Thursday of this week so far to see what had happened. And as we looked at the week end of last week, we were in a sideways cycle, going absolutely nowhere, total indecision out of the market. And Wednesday, when the market finally did open after the 2 days off, we ended up with more indecision as we ended up with a spinning top. Being in an oversold position, we finally got our bounce and started heading up. And so our sideways trend continues as we're spending time above the 30-day moving average and below the 30-day moving average. Expectations are that we should be getting a bounce. We are now in an up cycle in this market. Let's take a look at a little magnified view of this, and we can see exactly what that looks like. Two funny looks there for Monday and Tuesday. Spinning top on Wednesday, breakout on Thursday from our oversold position. Expectations, where can we rise to? Well, we've got a target up there of around 1465, because remember, moving averages don't mean a whole lot in sideways trends. But all we got to remember that Tuesday we have the big news coming out of the election. Who's going to lead the country for the next 4 years, and how is it going to be led, and what effect will it have in business? Those things certainly liable to have a big influence on what happens in the market and what market expectations are, depending on who the candidate is. So SPX now in an upward cycle and a sideways trend, with our moving averages basically sitting in a bullish position, but headed towards a cross here, as the 30 is above the 50, which is above the 200. S&P showing good strength on Thursday, up 1% for the day, being led by the tech sector, and we will in a moment take a look at that NASDAQ and how it led the market up. S&P up 1% for the day, and breakout from that bottom level of support, which held. Let's take a look at the Dow, see what it did. Looks very similar. The Dow a little bit weaker, as it was very near its 200-day moving average, but we did get a bounce on the Dow, and kind of average volume with that bounce. No big volume surge, and Dow up about the same 1% as the S&P. The leader for the day, of course, being led up was the NASDAQ. Let's take a look at the tech sector, as we see it had almost a 1.5% move out of the NASDAQ composite as it bounced off of that 200-day moving average. Notice that's a difference between the S&P and the NASDAQ, is that it had a bigger, deeper pullback. And so we are now in an up cycle, and the NASDAQ and the tech sector had a good showing, as there was lots of news that came out on Thursday, which may have helped the market bounce from this oversold position. As we saw employment numbers better than expected, we saw ISM better than expected, we see consumer sentiment better than expected. Every single economic announcement that we were waiting for on Thursday came out and was better than expected, as we would love to see some kind of move out of the overall economy as we head into the next 4-year section. Let's next take a look at the small cap section, the Russell, and see what percentage it was up on our breakout Thursday. And we see that it too broke out and is in an uptrend, up cycle rather, basically sitting in a downtrend, showing us that it's very near resistance. And of course, we had this crossover take place between the 30 and the 50 as the 30 crossed down through the 50, showing us a little bit of weakness in the Russell 2000, as it was up 1.1% for the day, but certainly in a downtrend, as the Russell has been helped leading us down. And so with that thought in mind, let's go ahead and move forward. The VIX on Thursday. It was trading well into the middle of the range of our 20 to 15 range for the VIX, as the VIX is showing us not a whole lot of fear in the market as we head into our big election day. Looking at our TLT, our ETF for bonds, we saw that it was down for the day as bonds pulled back, as the market pulled up. That is a normal expectation. It had been in an up cycle. Basically looks like a downtrending issue for the bonds, and we see that the bonds gave us a sell signal on Thursday as we get a lower high, lower low in the cycle that bonds go through, which is usually contrarian to what the market pulls through. Can be exceptions to that in October, as we see that we've been steadily selling off on the bonds since August. All right, with that fact in mind, let's take a look at the financials. We'll look at the XLF, the spider, this sector being carried by Bernanke, and we see that QE3 certainly helped influence this, as this sector is trading in a sideways trend. Notice the trading within our yellow zone up here, looking for that target out of the XLF, bounced off the 50-day moving average, up 1.2% for the day, as it gave us a buy signal on Wednesday. XLF, so what kind of bounce did we have? What kind of volume? So right around average volume coming out of that sector, as we generally see it follow the overall markets, and it's kind of a healthy sign when we see that taking place. USO, our oil ETF, up very little for the day, but we saw we did get a little bit higher high and a little bit higher low, as we're in an upcycle on oil, very depressed from where it was just a short period ago, as oil has pulled back again, probably waiting for news out of the election to see which way the country floats, as to which way the country is going to be run during the next 4-year session. Finally, let's take a look at golds, their safe haven, and see that there was a little bit of leaving gold, as we're no longer up around that $1,800 an ounce area, and we've had a bit of a pullback in gold. Nothing remarkable there, as we got a lower high, lower low, sell signal on gold. But remember, again, Tuesday could change every single market that we're looking at. So for those of you that are short-term traders, be careful as we go into this section. Let's take a look and see what kind of volume we had on Thursday, with this about around a 1% breakout, and then a heavier breakout in the NASDAQ. Big news that we had on Thursday, as we got strong numbers out of all of our economic indicators. We see that we had our breakout from our trading range, and we see that it was on basically less than average volume, and that's to be expected, as basically markets sitting around waiting for news out of the election. All right, with that thought, for those of you that are gold members, stick around for our stocks to watch. We'll see what kind of effect, as the market went up 1%. Which way did our stocks go? Most of our stocks having now gone through earnings, we have an idea of what kind of patterns are going to set as we go forward. And so for those of you that are not gold members, if you want more free videos, go to www.optionsuniversity.com/free gold. With that thought in mind, this is Butch Shorak. It's Options University. It's Friday, November 2nd, 2012, already into the month of November. How the year flies. This should be the strongest quarter of the year, but again, with the election, it kind of overpowers everything. That's what news does. So to you ladies and gentlemen, thank you for being here.